Hi, my name is Mike Carpenter, frequently and sometimes affectionately known as Mike the Money Man. I'm a mortgage broker in the state of Washington, and my license number is 111356. So in the previous segment, we talked about closing costs. In this segment, we're going to talk about prepaid items. We're going to talk about what prepaid items are, prepaid property taxes, and prepaid hazard insurance. We're going to talk about what a reserve account is, and we're going to talk about how the payments for your property taxes and hazard insurance are distributed throughout the year. We had mentioned that there are two types of costs associated with doing a loan. One is closing costs, all the myriad of people who have to provide services for your loan. And we mentioned that those are true costs. They're actually spent money. But we also mentioned that there's something called prepaid items. And those prepaid items are items that you pay for in advance that benefit you. And these include prepaid hazard insurance, also known as prepaid homeowners insurance. And those are also there's also prepaid property taxes. And there's something called prepaid interest. Prepaid interest is so impactful that we're going to, and so specialized or sort of so different that we're going to cover that in the next segment. So we can devote an entire segment to that. But when you make your payment, you typically, unless you've waived what they call waived reserves, your payment consists of principal and interest, property taxes, hazard insurance, and or mortgage insurance if it applies. We've covered mortgage insurance in a different segment, and you might refer back to that if you have any questions about mortgage insurance. But typically, unless you've waived reserves, you don't make these payments to three different sources. You make the payment and it goes directly to the lender, and the lender puts those items, those property taxes and hazard insurance, into something called a reserve account. In a reserve account, trying to spell there, a reserve account is an account that is set up by the lender for the purposes of managing the property taxes and hazard insurance when they become due. And it's seeded with a little bit of money, and it shrinks and grows throughout the year. And as they say, it's your money, and if you sell the house or you refinance the house, it goes back to you. And the reserve account sort of shrinks and grows throughout the year as things get paid out of it. And there are 3 times of the year that things get paid out of it. 2 times for property taxes, and 1 time on the renewal date for your hazard insurance. So let's make up some numbers here. Let's say that your hazard insurance is $75 a month. It might be, say, as little as $45 a month, depending upon what you buy, and it could be, as high as $200 a month if you buy a really expensive house, or you have a low deductible, or you have earthquake coverage or some sort of crazy thing like that. But for the purposes of our illustration, we'll say that your hazard insurance is $75 a month. And let's say your property taxes are $400 a month. And when somebody quotes closing costs, including prepaid items, there's really no way for them to know accurately what hazard insurance is, or accurately what property taxes are, or what prepaid items or prepaid interest are, until you actually have a specific property for them to quote from. So sometimes they leave all this stuff out, and sometimes they overestimate, and sometimes they underestimate. But until you find a property, there's no real way to know it unless you estimate it. But let me talk quickly about hazard insurance. So let's say that the hazard insurance at closing, they collect 12 months plus 2 months, sometimes 12 plus 3. The 12 months, which would be, in this case, $900, if it's $75 a month, goes directly to the insurance company at closing. And let's call that Geico, however it's spelled, for the purpose of our illustration. So at closing, $900 goes directly to your insurance company. And let's say you closed on January of 2019. The renewal date of your insurance is going to be 12 months out. So they pay 12 months in advance, and your renewal date becomes January 2020. So every January, on the date that you close, the Geico will send a bill to the lender and say, it's time to renew the insurance, please pay us. And presumably if you have been a good homeowner and that you've dutifully paid 12 months of payments, they will see that reflected in your reserve account, that you have $900 in there. And Geico will send a bill for $900, and then the lender will send Geico $900. And that happens every 12 months from the day that you buy your property. But they will they will reserve 2 or 3 months. So those 2 or 3 months will go into this reserve account. So you have a buffer, sort of a buffer, so you don't, that doesn't run dry, so to speak. So that happens every 12 months. Property taxes, property in King, Pierce, and Snohomish County, in Snohomish, or whichever county you're in, they want to be paid every April and October. So we'll say, we'll call this January, February, March, April, May, June, July, August, September, October, November, December. Every April and October, the counties want to get paid 1/2 or 6 months of property taxes. I don't know why it's April and October. It's something of a mystery to me. That appears to be roughly in the center of the first 6 months and roughly in the center of the second 6 months. So the lender will reserve, for the purpose of our illustration, we'll say 6 months. It's really between 3 and 6 months, but I don't want to get too complicated. Every April and October, King, Pierce, and Snohomish County will send a bill to the lender and say, pay us 6 months. And if you've made your payments on time, they will pay out 6 months, or in this case, if it's $400 a month, it's $1,200. And you don't really see this happening because it sort of happens behind the scenes. You never get a bill from your insurance company, and you never get a bill from the county. It goes directly to the lender, and the lender takes care of it. But you do see this activity reflected on your mortgage statement. Let's say you have every month you'll get a mortgage statement, and somewhere on that mortgage statement there will be some sort of escrow accounting, and it'll say how much you've paid into and how much you've paid out of it, and what the current balance is and what is expected to be paid. But for the purposes of illustration, we'll say that they're going to reserve $2,400. So if we take $900 for the property taxes paid directly to the insurance company, and an extra $125 plus or minus that goes into the reserve account, and the amount of money that gets reserved for property taxes, we are somewhere in the neighborhood of $3,425 plus or minus. That is on top of, or in addition to, the $3,200, the $3,800 that we spoke about for closing costs. So if we add all that up, it is somewhere in the neighborhood of, say, $7,400 to, say, $7,900 plus or minus. So when people say, what are my total closing costs, or what is the total amount of money in addition to my down payment that I have to come in with, I typically say it's somewhere between $7,000 and $8,000. But of course, we cannot know exactly how much that is until we know exactly how much the hazard insurance is, and exactly how much the property taxes is or are, and how much the prepaid interest is. But again, we'll cover prepaid interest in the next segment. So I hope you learned something. I hope that you can decipher my crazy diagram. If you have any questions, please let me know. Thanks for watching my video. I hope you found it useful and informative. It's intended as a broad overview of the material so that you may have some further questions. Feel free to ask them, and I'll be happy to answer them as best I can. Share, like, and subscribe, but share it with somebody who can actually use it. Maybe someone who's going through the loan process and is a little confused. Hope they get something out of it as well. So happy viewing. There's more to the series. Hope you enjoy the rest of the videos. Thank you. And now for a quick disclaimer. So these videos are intended for informational purposes only. So don't rely on them for making important financial decisions, especially decisions concerning your housing. If you've got any questions about how this information applies to your given situation or your given transaction, please contact your mortgage broker directly, and they can give you advice. And any rate, fee, cost, or loan limit information was accurate at the time that the video was made, but may not be currently accurate because underwriting guidelines change all the time. So if you've got any questions about how this information relates to you specifically, contact your mortgage broker. So I hope you continue to enjoy the series. Thanks.